When the US birthed its own central bank, the Federal Reserve, unlike the name suggests, it's not truly federal, nor does it hold much reserve. So what is it? The Federal Reserve Act was drafted in secrecy on Jekyll Island, Georgia. Why the secrecy? Attendees included powerful bankers like JP Morgan and Paul Warburg, who represented, drumroll please, the Rothschilds. But this wasn't the first time central banking was introduced in the US. In 1791, Alexander Hamilton spearheaded the creation of the first bank of the US, designed to stabilize the fledgling nation's finances. However, its 20-year charter expired amidst debate over federal versus state control of banking. Then came the Second Bank of the US in 1816, but it too faced fierce opposition, particularly from President Andrew Jackson, who saw it as a tool for the elite. Jackson's veto and subsequent bank war marked a hiatus in central banking until the financial panics of the late 19th century reignited calls for reform. Culmination in the Federal Reserve creation in 1913 was the Fed's inception, the answer to chaos or the beginning of a carefully orchestrated monopoly over the US economy. Imagine a smoke-filled room where the wealthiest men in America decide the fate of the economy. Feels very House of Cards, doesn't it? Over the next decades, the Fed's policies often seemed to favor Wall Street over Main Street. Was it incompetent, or was it by design? Fast forward to 1998, Europe establishes the European Central Bank. Like its predecessors, the ECB was designed to stabilize economies, but skeptics argue that it consolidates power in ways that serve the elite more than the citizens. Behind its creation